It's the highest interest rates in 12 years. This is the weekly report on Major Money Matters. Welcome to Major Money Matters. My name is Major, and I'm the host of Major Money Matters. I'm a mortgage broker powered by Edge Home Finance, and on the weekly report, we give you information about the housing market and how different economic factors may be affecting your home buying or potentially home selling process. So if it's your first time coming across the channel, make sure you go ahead and like and subscribe so you get notifications every single time we post a video. During the week, we usually post videos about general home buying information, especially focused on the VA home loan benefit. All right, let's get to it. Sometimes, I know you guys have rough days at work or a rough week at work, and it's just a rough time. If you're a mortgage professional or if you're helping someone buy a house, it's tough out here. Interest rates are going up. And how quickly are they going up? They're going up fast. So let's throw this chart up right here. And this is the 30-year fixed rate average across the United States. Now, this chart is interesting because it actually lags behind about 4 to 5 weeks because this is the average of homes that are closing. So if you're closing on a home, you actually lock that rate about 3, 4, 5 weeks ago in order to be closing right now. So the average rate is up to 5.11%. Okay. And this number is going to go higher because interest rates have gone higher in the past 1 month. But the last time we were this high was back in April of 2011. So interest rates are certainly higher than they were previously. We are seeing a spike in rates. And what I really want you to do is take a look at the slope of this line and the speed with which interest rates are going up. So if you're out looking for a home right now, does this mean you should be out of the market? No. Interest rates may be in the 5s. Government rates, you're still probably in the high 4s or something like that. But does this mean you should be out of the market? No, because the interest rate on renting is 100%. So you get into a home. I'm going to talk about a long-term strategy later on through this video as we talk about some other things that are going on in the economy and some things that might be coming down the pipe. But this is where we are on interest rates right now. So if your average 5.11, if your credit score is a little bit worse, then you're probably a little bit higher than that. And if your credit score is a little bit better, you might be a little bit below that average. Or if you're in a government loan, you may be able to get below that average. But that's on average where interest rates are right now. We just have to be aware of the market and simply what's going on. So the next thing we talk about. All right, Jerome Powell came out today and he said, hey, the hike that is coming in May is likely going to be 50 basis points. Now, what that did affect the markets because really that 50 basis point hike is an admission by the Federal Reserve that inflation is really simply out of control and they have lost the bubble. Interest rates are not going up because the Fed is raising rates. Okay, if you think that, then you need to go back and watch my video where I talk about the real reason interest rates are rising, and I break all of that down in hopefully a succinct way where you understand that inflation is actually the reason that interest rates are rising. And the markets shift when the Fed talks like this because they're making more of an admission that we have a problem with inflation and they really can't get a grasp on it. So we're increasing the Fed's federal funds rate 50 basis points. That's probably coming again in May. Now, typically the bond market likes when we increase the Fed funds rate. Bond market because the bond market likes that, we likely see some stabilization of interest rates, or we see interest rates actually go down. Does that mean that interest rates are going to go down from 5.1 down to back into the 3s when they raise rates? No, does not mean that. But we should see some leveling out as the Fed starts to increase rates. We should see it, but I think this is going to continue through the rest of the year with rates being higher and higher. And we're going to talk about what to do about that if you're actually looking for a home in a little bit. because Fannie Mae came out this week and they said, hey, we're forecasting the U.S. economy to fall into a recession next year, which will be 2023. Now, recession, and I talked about this in one of my previous videos, a recession does not necessarily mean prices are going to come down on homes. What a recession usually means is that home prices stay constant or increase through a recessionary period. Okay, I reviewed this you can go back about 3 weeks when I talked about this, and I showed you some different charts that talks about what happens in a recession. But this means that interest rates may come down or are likely to come down, but home prices are going to stay constant or go higher. So keep in mind, my advice has been consistent. Yes, interest rates are high, but I recommend getting into a home, seeing that equity increase, and then once you're into that home, look for an opportunity to refinance when rates are lower. Are prices going to come down? I keep saying no, I don't think prices are going to come down. To date, I've been correct in that assessment. And here's another data point to share with you about why I don't believe that prices are going to come down. We have a serious supply and demand issue in the United States. And this article came out this week. Home builders, this is another, I think this came out from Fannie Mae also. Home builders need to construct 3.8 million homes to meet demand. Okay, so number one, understand that home builders have never constructed more than 2 million homes in 1 year. So they would need to construct 3.8 million homes in order to meet demand. Now that's just meeting demand. The other problem is once you meet demand, you still have demand coming on to the market. You have more and more people, and next week I'll probably show this chart, how birth rates affect the people that are coming into the market. But more and more people are coming to the age where they are ready to buy their home. So if home builders need to build 3.8 and they've only ever built 2 million homes in one given year, you still have to find a way to curtail or stop the demand of people coming into owning a home. Now, is it possible that higher interest rates have some effect on demand? Yes, on a micro level, probably so, but it's more likely that those home builders do not just leave the market. They say, hey, I'm going to buy at a lower price point because I understand that although interest rates are going up, I need to get into a home. You have some people out there who are just don't believe in paying rent to somebody else, and they're going to buy a home regardless of what the interest rate is. So you're still going to have demand coming on while you have basically Fannie Mae saying, hey, we need home builders to construct 3.8 million homes, which is 2 times as much as they have ever done in history. So what do you do if you're looking for a home in this time? Number one, I recommend you're working with a broker that offers lock and shop. Lock and shop is a powerful, powerful tool. And understand that I'm a mortgage professional. I'm in this industry. I wake up every morning and I'm looking at rates. I'm seeing the shifts in the market. I'm seeing what's going on. And when I am locking a client, sometimes I'm even like, wow, man, rates are really going up higher. So lock and shop really gives you an advantage, and it never fails. When I lock a person immediately when they go into contract, I'm locking them and I'm like, crap, that interest rate's kind of high relative to where we were before. I'm locking them. And then by the time we get to the closing table, 3 weeks later, 4 weeks later, we're sitting at the closing table signing, and I'm looking at that interest rate and I say, wow, that's pretty good compared to what interest rates are today. And that's how quickly the interest rates are going up. So I recommend you be working with a mortgage broker who offers lock and shop to you, or a mortgage professional who offers lock and shop to you. Lock and shop are a great tool. What you can do is lock in your rate, and then you can go shop for a home. Typically, with most lenders, you have to be under contract before you lock that rate. Somebody's offering lock and shop, you can lock the rate and then go on. When I'm doing pre-approvals, I'm talking to my clients about lock and shop, okay? And if you're one of my clients right now and you have not participated into lock and shop because maybe you got pre-approved 4 or 5 months out from when you were gonna be buying your home, now is a great time to lock and shop, because I'm telling you, in the short term, this is not going to slow down at all. Why am I wearing my 49ers hat? It's a crazy week. Debo wants to trade. I don't know what's going on with the 49ers. The market is going crazy. we just kind of gotta, figure it out and stay in this thing and see how it all plays out. So we'll talk with you next week. That's it for this week. See you next time on Major Money Matters.